All right, everybody, welcome back. It's episode 101 of the Canadian Private Lenders Podcast. Neal, we are live at the Canadian Mortgage Summit here in Toronto. It's like a party in here.
I'm feeling famous. People keep taking our picture. They're playing tunes. I was just saying I'm waiting for them to bring the bottle service out.
Yeah, absolutely. It's been, this conference is always crazy, but it just feels like it gets crazier every year. Super loud in here. I'm yelling at you right now.
I hope you guys are getting good audio.
We're making it work. So exciting episode coming up here. We had Reaza Ali, National Broker Relations Manager for Fisgard Asset Management, one of the biggest private lenders in the country. Went through some super interesting stuff with Reaza, Neal. He talked about the fact they don't charge lender fees for the most part.
That blew my mind.
Which is crazy. Obviously, that's going to be it must be an incredibly popular product for him. They started out in Western Canada and have expanded into Ontario, and it's now representing a significant portion of their business. And he also talked about them backing out of the commercial space and the construction space. So, real interesting stuff. What else is top of mind for you, Neal?
Yeah, exactly to that. I think there's some interesting stuff that he talks about how they expect to grow in this marketplace where we all know there's a little bit of downward pressure across Canada. So it's interesting to hear how Fisgard intends to expand their book, protect their investors, and then continue to offer products like that have no fee.
Hey everyone, thanks for tuning into the Canadian Private Lenders Podcast, a show covering the private lending industry, the mortgage broker space, and the Canadian economy. Your hosts are Neal Andreino and Ryan MacNeil. Enjoy.
We are here live at the Canadian Mortgage Summit in Toronto, Ontario, and our first guest today, National Broker Relations Managers with Fisgard Asset Management, Reaza Ali. Reaza, welcome to the pod. How you doing, man?
This is awesome. I appreciate you guys having me on. I'm
Absolutely.
excited. I'm excited to do this.
No, it's great to have you here. We're there's a lot going on here. I know this conference has been going on, I think, for 4-ish years now.
I believe so.
I'm always shocked at how crazy busy it is here, but nice to see.
No, this is fantastic. You know, they bring the crowds out, which is really important to us as lenders, and we get in front of our audience, and that's the key behind
100%.
it, right?
Yeah,
it's definitely nice to have something that's specifically focused on the alt and private space, right? And it's you can see how much it's increased in popularity, right, in the last couple of years.
It's pretty incredible when you walk around the trade show floor. It's filled with alt and private lenders right now, and that's really a reflection of the environment that we're in.
100%.
The lenders that we see. So it's fantastic.
Yeah, and I think we should dive a bit more into that. But before we do that, why don't you walk us through, Reaza, a bit about your background, kind of how you stumbled into the mortgage space. I know you've been to a couple different stops. I believe it was Home Trust before.
Right.
Fisgard for. Anyways, you take us through your background and kind of how you got to here.
For sure, yeah, and you use a great word, stumble, because no one ever really plans to be in this space, but I'll tell you, way back, I actually did plan to be in the finance business through some fluke as well, and it was a job that I was doing. I was actually in the courier business. I call it my first real job, still living at home, and I did that for almost 7 years and realized and kind of worked through the ranks in management, but realized I don't see myself in this industry forever and ever. And I grew to learn a lot more through that about the finance business. And I kicked it off at Household Finance for those that have been around for a little while. So I've had experience on personal finance, commercial with the old Interbay funding back in the day in the early 2000s, and made my way through rounding out my career with financial planning and insurance as well. So I wanted to honestly get back onto the lender side. I truly enjoyed the lending side of the business and working B2B with the mortgage brokers. I've worked with mortgage brokers now probably a good 20 years, and I've been in the business about 27 years.
Did you just get tired of the B2C?
It's listen, when I talk to brokering is a challenge.
Yeah.
Dealing with consumers in general can be a real challenge.
Yeah.
Doing B2B, I find you're just dealing with a different level of personality as well and understanding of what you're offering in many cases. So for me, that works. I really do enjoy that piece.
You get tired of dealing with the direct contact with your clients. I get it. We talked about that too, as we like to have brokers bring the deals, because it's a whole nother animal when you're...
Brokering is not an easy thing. If it was, everyone, as they say, everyone would be doing it and would be so successful at it.
Yeah.
But no, I really do enjoy teaching people about the business, about what we offer. And as you mentioned, I ended up at Home Trust to get myself back on the lender side.
Nice.
Enjoyed the time there for about 3.5 years and made the choice to come over. And I was very fortunate that at the time Fisgard was looking for someone in Ontario.
Amazing.
Because they had just opened the territory up.
Yeah.
So yeah.
So you basically were there for the start of the expansion into Ontario, or basically
about 2 years in.
2 years in.
Yeah,
Okay.
roughly 2 years into Ontario. So it was really
How long ago was that?
8 years ago.
Okay.
Yeah. So it was really cool to see come in, and you know, the whole plan behind that was diversification of the business from BC and Alberta.
Yes.
Go ahead.
No, I was just going to say, on that note, let's dive in on Fisgard. So, I mean, I know you guys are a massive brand name in the private space, in the mixed space. BC based originally, I believe it's Victoria, if I'm not mistaken. But
that's correct.
Can you kind of take us through, maybe give us like the elevator pitch for what Fisgard does, a little bit about the history, and kind of how the expansion's rolled out?
Absolutely, yeah. So a little bit about the history. We're actually on our 31st year as Fisgard Asset Management. Hallie Noble and her family started this business. Her father, Wayne, started this business more than 30 years ago and established Fisgard out of BC. And at that time, you're looking at lending in BC, Alberta, and some of the prairie provinces as well. As economics evolve, you start looking at the diversification of the business. You don't want everything into one market. And you see those ups and downs in a particular market. The focus really is protecting our investors and the money that they entrust us with. That's a huge focus for us. Aside from, of course, dispersing that through our broker channel. But when you look at the offering from BC to Ontario, it's fairly standard. Residential, first and second mortgage business, purchases, refis, owner occupied or rental. We do have a commercial and component as well to the company. As of right now, it is on hold for a number of different reasons, but the bulk of the business really is first mortgage residential. That's how we're made up.
So, and I mean, we might have it on here, but when you talk to a broker, what are you saying to them is kind of the opportunity with working with Fisgard? Yeah,
so a couple main reasons why people reach out for us and they see our marketing pieces or hear me talk about it is first and foremost, we approve our files with no lender fee on our first mortgage business.
Okay.
And that's a real attraction to mortgage brokers in general, because for the most part, their clients all believe they're A consumers and potentially they fall into the B space. But when you come into the private lending space, the conversation for that broker to their consumer, it's a bit of an easier transition.
Yeah.
When they say, this is the rate, there's no lender fee, and now they can also charge their broker fee to be reasonable and actually make some money as well, which is a key piece.
So you guys have no lender fees across the board always?
On first mortgage business, that's
on first
correct.
Mortgage business,
With
okay.
seconds, we do charge 1%, which is, I believe, is reasonable. But that's really our focus, is the reasonability of things. And, so that's one component. Our terms, we offer a 1-year fully open term, as well as a 2-year term where it's fully open at the beginning of the second year.
Would a client expect a fee on renewal if there's a requirement for renewal?
Yeah, that's a good question. So on our first mortgage business, as long as they've paid as agreed, we don't charge a renewal fee as well.
Wow.
So that's on the back end, as I like to say, that's a key component in the conversation piece. Most consumers will never think of asking a question like that.
Yeah.
What happens if I need a second term? What does that look like?
Yeah.
From a rate perspective, from a fee perspective, what does that look like?
Yeah.
So when we're looking at a consumer and working with our broker community, number one, we want to be fair.
Yeah.
And we want to make it fair to both the broker and the consumer, not just on the front end, but if they do need us for a second term, or if they're ready to exit from us, we don't charge
A penalty on breakup.
Yeah.
We don't charge a penalty on our first mortgage business or second mortgage business in that fact.
Did you guys always run the business, without the fee? Like, is that from day one? Was that how it was? Or
So
would it
that's
be more competitive market?
as long as I've been here.
Yeah.
I'm sure prior to that, we were just like most mix out there. You know, you start out the business, you're going to charge a lender fee, whatever that number is.
Yeah.
You know, I learned shortly after I started, because I asked these questions as well, you know, why are we like this? And one of the reasons why is it diversifies, you know, it distinguishes us from the other people in our space.
Is there anyone else doing it?
Not that I'm aware of. There may be one or two others out there, but
Yeah.
not really. No.
That's a really interesting product. I'm curious though, is that across all geographies?
Yes.
Or is it okay? So
Yes,
you
it
could
is.
do it anywhere. It could be
It's
in
from
Saskatchewan or
BC
in
to
anywhere.
Ontario.
Okay.
Exactly.
Wow.
Exactly.
Okay. Very
so,
cool.
So we do keep it across the board.
Right.
Um,
And I assume there's minimum qualifications as well too, in terms of
you know what?
credit profile.
We as a lender, again, understanding business models is very important for our broker community, and I always talk about that. You need to understand the lenders that you're working with, especially in our space. When it comes to transparency, that's a key piece.
Yeah.
To really truly understand the cost to your consumer. You know, if you can't have those conversations with your consumer up front, you might be in some pain at the end.
Yeah.
When they come back to you and say, well, you didn't tell me about this or that. So, yeah.
People can accept any fee and rate, but if they can't get out from under it, it's not very valuable.
Correct, yeah. And listen, at the end of the day, there's a need for a multitude of lenders.
Sure.
Because I say this all the time, we can't do every single deal. No business model really can. They're not set up for that.
Is that
Yeah.
product your main product? Is that what
That
you
is
guys
our
lend on the
main.
most, and what a lot of brokers come to you guys for?
Yeah, that is our main product in the mix of business. First mortgage residential, so the bulk of our business is done with
Yeah.
a no lender fee product.
Okay.
Now, with that said, the brokers can choose to reduce the rate
Yeah.
by adding a lender fee. So we offset. We're still
Okay.
coming
Makes
out with the
sense.
same yield.
Yeah.
And that's a key point that I always like to talk about when I get the question, well, what's your rate? And I come back and say, listen, we really need to talk about yield and understand how that impacts your rate and what that means.
Yeah.
You know, so you can have a yield made up of no lender fee. You can have a yield made up of a lender fee and a lower rate. We all have the capacity to do that as lenders.
Yeah, you bring up a great point, Reaza. I think one of the great things about working in the private space is the flexibility that we're able to
There
give
is.
to our broker partners, right?
Yeah.
You know, same thing we do at Keystone. You know, we'll go higher on the rate, lower on the lender fee, or vice versa. Doesn't really
Exactly.
matter, right?
Yeah.
And you mentioned the open aspect, or not charging a 3-month interest penalty.
Mm-hmm.
There's a lot of players in the industry that do that,
Right.
and that's fine. Like, everybody's going to run their own business their own way. But from my perspective and how we run our business as well, private's intended to be a bridge, or getting from point A to point B over a period of time. You don't want them. Typically, most private lenders don't want them to stick on the books for too long, because
Yes.
problems can happen. You want them to basically graduate, right, and have
Absolutely.
cheaper, longer-term financing.
Well, that leads to another interesting topic of, if you're a lender that will choose to keep someone on
Yeah.
for an extended period of time, if you're not consistently bringing in investor funds and capital into the business,
How do you grow the business?
you potentially can run into a situation where all of your capital is deployed and very little is coming back for the demand of business that you have.
Yeah.
At that point, what does that make you? You're not necessarily a lender anymore. You're more of a mortgage administrator at that point, with the files on the book. And do you really want to be in that position? So, I always like to talk about the business of capital management and the balance of the demand on the front end with files coming in, and the correct underwriting to ensure that there's an exit, whether it's a year or less or potentially 2 years, so that you can consistently see that flow of capital coming back into the business that you can get back out.
Which makes total sense, yeah, because you can lose liquidity, which is a big problem when you have investors. You need to be able to move capital.
Right.
And on the other side of it, like running the business, how are you guys able to offer that? Because I think fees are a big part of the revenue for most of the management firms that are out there.
Right.
Is it like you guys are just very prudent in managing how you spend your funds, how you run your business? You guys are lean.
Yeah.
Is that really the main focus to be able to
so
keep it alive?
Again, when you look at different business models out there, the bulk of our capital is investor-based.
Yeah.
We don't have large secured lines of credit from credit facilities. So we control the investor base and the capital that's flowing through there. So we're consistently lending. We have our internal EMDs that manage that. So again, coming back to proper underwriting, choosing the files that you do see a reasonable exit within a year or two, and balancing that with the demand of business on the front end and the quality of that type of business as well. Because you can choose to do a lower quality of business, but what are the chances of that exiting off your book in a timely manner?
So, and then within that mindset, how do you continue to grow with that? Like, how are you guys growing? I feel like it's easy to go out and get maybe easier to go out and get the mortgage business. You guys pound the pavement marketing. You offer no fee. You have a great product.
Right.
How do you then match that with an investor base? Do you guys have really like a few really strong investors that back the pool, or how does that work usually?
We actually have, I think right now the number is just over 2,500 investors into our
Holy
mix.
smokes! Okay.
So it's a different type of investor. They look at us as a vehicle for capital preservation.
Sure.
We pay a decent return to them. We have a portion of their investment funds as a whole, but they know that they're going to see a decent return, better than they would get at a GIC or at a banking institution in general. But they also know we're protecting that money. That principal, it will be there for them when they need it, with whatever growth that they're seeing. You talked about growth and profitability and everything else. When you look at the makeup that we are, the management fees on the investment side, right? So it's not just about the lending piece. It's definitely about the investment side and the management fees that are collected on the total book as well.
Okay.
Right.
Whereas
if
sense.
you have an operation that's made up of primarily secured lines, they don't have that same component as we do.
Interesting.
Yeah.
When do you ever have to put a call out to your investors being like, we're trying to raise more capital, or how do you typically?
Consistently. Consistently,
okay.
And that's just a function of there will always be some investors that are, whether they're aging out, right, and they're ready to pull their capital now. There's always going to be that component. So that's a consistent thing for our investment team to do, constantly on the phones with the investor base, with external, trying to bring new investors in as well.
How many loans do you have on the book, roughly?
Roughly, last time I checked, we float around 550 to 600, roughly.
Yeah, so you have 600 mortgage files, but 2,500 investor files.
Yeah.
Interestingly enough.
So
our investment team's busy with
the investment team would be
I assume that puts your book somewhere in the 400 to 600 million
just
range?
Just under.
Okay.
Yeah.
Right on. Yeah, you said you do second mortgages as well.
We do second mortgages
I
as
assume,
well.
can you share what the average size of a first mortgage would be
for
your territories?
Just in general, across the board, I looked at the numbers nationally. An average mortgage size for us right now is floating around 480 to 525 around there.
Nice.
Yeah. So again,
on a first or
on that's everything.
Everything.
That's everything.
Okay, that makes sense.
When you look at first mortgages, we range as low as 100,000 up to 1.8 million.
Okay.
So I would say it varies as the year progresses.
Sure.
And sometimes year over year, but on average, you're going to see 500,000. When I'm looking at setting numbers going into next year, I tend to work it out on a 500,000 loan amount average.
Makes sense.
Yeah, and then unit-wise, compared to what we want to hit as a growth model.
Are you guys dabbling in the commercial space at all?
Sorry?
Are you dabbling in commercial at all?
We were all year.
Okay.
And we've decided about 2-3 weeks ago that we're gonna put that on hold for now and really focus in on the core
side.
Business, which is the residential. So,
And what about construction loans?
yeah, we were considering those case by case this year. Honestly, it's been on hold for a while. We see that market as a very volatile market still. So it's a challenging space.
Yeah.
I started saying brokers about 2-3 years ago. They said, well, why are you so cautious with construction? And I mentioned this to them, and they're like, oh, well, when you have small to medium-sized builders choosing not to start their projects, that tells you something.
Yeah.
Yeah.
There's some challenges there.
We're in a unique marketplace, so we talk about this a lot as well.
You guys are in a very unique position.
Yeah.
Yes.
Yeah. We're fortunate. Were you meaning Atlantic Canada or just in general?
In general, yeah. I mean,
it is unique, I think, across the board. But fortunately, in Atlantic, we're still able to.
It's
still not. There's still the demand there to do it, and it's still making somewhat of sense, I guess. Maybe not as much as it did a couple years ago, but
yeah, our market doesn't have as many suppliers, whether it's capital, home builders. So there's still the opportunity for some stability
on
there.
the res side, at least. Yeah.
We don't have the pace. So like when the demand's there, we don't have the pace to catch up as quickly. So it flows out a little slower.
Right. Yeah. That's great.
So speaking of geography, I want to go a little deeper on your split. So
for sure.
Obviously, you guys started in BC and then have expanded. So did you? I assume first expanded to Alberta and the prairies and then to Ontario. Is that how it went?
Yeah, it was really BC, Alberta.
BC, Alberta. Okay.
That would have been the main couple markets.
Yeah.
And then the prairies would fill in a little bit.
Sure.
When I started, I would say our capital split, our distribution was about 15% in Ontario.
Okay.
So 8 years ago. The goal was to get that to 25. That happened fairly quickly.
Yeah.
Yeah, and it does help to have someone on the ground for sure.
100%.
But that's gone up to, I would say it's fairly close to 50-50 between Ontario, BC.
Wow.
Out of the capital, and with Alberta filling in.
So Alberta being a much smaller share in your relative business?
I would say so. Yeah. Well, it has grown quite a bit in the last couple of years.
Okay.
But not close to Ontario or BC. No.
Got it.
Where do you see the growth coming moving forward?
It depends on how this economy turns around.
Yeah, that's kind of the
really.
Based on what's going on right now,
Because
how do you see the growth coming?
I'll tell you, Alberta.
Still chasing lenders for updates? Manually entering deal details? Are you a law firm still not able to perform a discharge with just a simple button click? Well, Lawyer Automator is the modern solution built specifically for real estate law firms working with private lenders. Eliminate manual effort and automate intelligent document generation and digital instructions between lenders and lawyers with just a simple click. Enjoy seamless communication across your entire team and all stakeholders involved in the deal, from clerks to partners and everyone in between. Get comprehensive end-to-end reporting with visual business intelligence tools right on your screen. Perform discharges at the touch of a button. And because we're connected to Canada's largest private lending network, we'll even help you grow your client base with exclusive networking opportunities. Lawyer Automator. Work smart. Close fast. Grow your business.
I was talking to some of our broker partners out in Alberta, and we started to see this developing. And it's like anywhere, even Ontario, and you guys will experience this eventually.
Yeah.
In Atlantic, when you see that quick run up, at some point it has to level off.
Yeah.
And in some cases it doesn't just level off; it tails down even further. You're starting to see a little bit of that now in Alberta. but in pockets of Alberta. They're still building and there's still demand. But I was talking to someone the other week, and they said something very interesting, and I agreed with it. The big run of Ontario money that ran out there the last 3 years, I think that's pulled back quite a bit. And there's still demand, but not to the same level.
So, yeah, I guess from your perspective, what do you think is causing this tail off or this pullback? Is it like oversupply or reduced demand through immigration, or like in Alberta, is there a pullback you're seeing in the energy industry and jobs? What's kind of causing that in the different segments?
You know, a lot of people are talking about tariffs, and I don't like to bring that up in conversation because it is an external factor, and I'm a big proponent. I think Ali's the same train of thought. We're probably the most optimistic people out there, or try to be fairly consistently. And I always like to say, you can only control what you can control and focus on that.
Yeah.
There's always going to be outside factors and noise, but if you focus on what you're good at, you'll come through it. With places like Alberta or Ottawa experienced this in Ontario, which they never really had before. They were always a very steady market, but when you experience that spike and things start to become unaffordable for the local market, that's an issue.
Yeah.
And the local market can only sustain so much, right, before it starts to crack a little bit more.
So how are you guys trying to manage?
It can be an affordability issue, which is definitely a key factor in both Ontario and BC. For many consumers. So
how do you see yourself managing like this marketplace? Like what's kind of the mandate moving forward for you guys to ensure consistent returns, and being able to like pay your investors and not, like, don't end up in a position where your debt's not servicing?
Yeah, so the one thing when I researched how Fisgard operated and what they'd been through 25 years prior to me joining, or 20 years prior to me joining, it said a lot to me about how they managed the different environments that they'd already been through. And I think that's one of the things is experience speaks a lot. So whether you're a new company into the business and you're going guns a-blazing and lending, if you have good leadership and management that understand how to pivot in certain markets and prepare for it, that's a key factor, and we have that. We have people in place that look forward, say, this is what we see coming down the pipeline. This is what we've experienced in the past. Let's be a little bit more prudent. Whereas others may not have done that.
Right.
And they found themselves in a little bit of trouble after the fact. So to me, it's all about, again, where's your focus for your business? And I always say, we have this capital, we need to lend it out so that we can earn profits to pay our investors and ourselves.
Yeah.
But we have to stay focused on managing the capital for the investors first and foremost, and protecting that. And the only way to do that is by risk management and recognizing the file. Sometimes it's better to take a step back, even if a market is hot, to take a step back in anticipation that you don't know when it's going to crack.
How are you, that makes sense. So taking a proactive approach versus a reactive, like,
Absolutely.
oh no, there's issues now. How are you guys internally trying, do you have like a set meeting that you have? It's a data-driven, and you guys are consistently as a management team reviewing that and trying to be ahead as much as you can?
Consistently. We look at many different data points across all 5 provinces that we lend in when it comes to the real estate market, but not just the real estate market. We look at the economics of the day as well and what that's trending toward. And when 2018 happened and there was a downturn there, although it wasn't extended, we looked at that and said, here's what we started talking about. What's the affordability picture look like for these consumers? And are we comfortable with that?
Yeah.
You know, if we're not, that's a key factor, because if you're going to extend capital to someone, the whole goal is to get that back. And for us, on a consistent monthly basis, and eventually in whole.
Yeah.
If we don't see that happening, it doesn't matter what the LTV is.
Yeah.
We're not going
getting
to
involved.
proceed.
Right. That old exit strategy we always talk about.
Yeah, 100%. Always comes back to the exit. So
Yeah.
we're going to start wrapping here in a couple
go
minutes.
ahead.
But just wanted to quickly ask on lending territories again. Do you
Yes.
guys focus on urban only, or do you go to rural areas as well, or
Right.
is the real focus to be in those urban areas?
Yeah, so I would say the main focus, urban, suburban.
Yep.
We do smaller centers, but we're not the super rural lender at all. So cottage country, small town Ontario or BC or any of our markets. And I'll give you an example. So in Ontario, since we're in Ontario right now, I like to look at a map and say, if you look in southwest Ontario, London, KW area,
Yep.
and go north of there to Owen Sound, it's a bit of a dead zone for us because it's a lot of farmland,
Yep.
very small towns, 500 population. Again, it comes back to marketability. If you ever had to realize on a property, how fast can you turn on that? Those areas are difficult. So that is not our focus. That's not our specialty.
Yeah.
And I'm more than happy to refer to lenders that is their specialty.
Awesome.
But that's not ours.
Awesome.
That's a conversation we also had. It
Yeah.
makes a lot of sense.
Yeah.
And again, you got to protect your investors as much as you want to grow your lending book.
Yep.
If you get in a position where you can't recoup that in the event that you need
Yeah.
to,
Yeah.
it doesn't make sense.
Capital preservation is much more important than
Well,
volume.
And you said it earlier. It's all about short-term capacity, a Band-Aid solution for that client, repair them, and put them into a much better financial picture.
Yep.
Yeah.
Yeah.
That makes sense. Well, Reaza, thank you for coming out. But we have one more question, and we've
sure.
asked this. This will be the first time asking, I think.
First time asking, and we're going to give them a bonus afterwards as well.
But there will also
I'm
be
the
a secret
guinea pig,
bonus.
Okay.
But so we've done 100 episodes now. We always ask everyone what they love most about the mortgage industry, and I'd say 99 times we got the people, which was great, but
Yeah.
we need to change it. So this year, or this next 100, we're going to ask, what would you change in the mortgage industry if you could change it?
Okay. I'm going to answer your first question and then the second one.
Okay.
So I'm not going to answer the people.
Okay,
although
good.
I love
Oh,
the
let's
people.
go.
Okay.
I owe the mortgage industry a huge thank you, because it's created a great lifestyle for myself and my family. It's given me that
Yeah.
opportunity to, for me, not being stuck behind a desk or being stuck in a shop somewhere. It's given me that flexibility for lifestyle.
Yeah.
To be able to take my son to soccer, watch the kids grow up and be there for them. That's a huge, huge thing, and that's what the mortgage industry's given me.
Amazing.
Banker's hours.
There is no 9 to 5 in what we do,
No.
right? And
Yeah.
now the second question was, what would you do to change it? I've thought about this before, and quite frankly, I really would love to see the quality of people engaged in this industry rise, and for people to take this a little bit more seriously.
Yeah.
We're dealing with people's life right here, and the biggest transaction of their life, or in our cases, in some cases their investment, their lifelong investment that they've worked hard for. I really do believe that if we saw better quality overall across the board, I think our industry would do so much better.
That makes a lot of sense. I think you see, I found this even for myself. I just used to sell a lot of real estate. Is it becomes such a transactional thing because you do so much of it,
Right.
that a client, this is their one deal they might do every 7-10 years.
Right.
But you're so used to doing it, sometimes you forget that, to your point,
Yeah.
it needs to be something that really gets taken seriously, because it'll impact the entire course of their life potentially.
Are you a private mortgage lender in Ontario looking for trusted legal support? Meet Grecky Carter Professional Corporation, a boutique real estate law firm in Midtown Toronto with deep expertise in private lending and mortgage enforcement. Grecky Carter closes hundreds of private mortgage deals every year, and when recovery becomes necessary, they handle both contested and uncontested enforcement with precision, from forbearance agreements to power of sale and cost recovery strategies. For lenders who demand clarity, efficiency, and results, Grecky Carter has you covered. Visit gclaw.ca to learn more and safeguard your private lending investments.
Yeah, and listen, people get into this business for many different reasons. Some people are strictly in it for the earning potential.
Yeah.
Others really want to help their consumers and grow a solid book of business.
Yeah.
There are many different reasons people get into this business, but I really think if they kept their focus on the seriousness of our business, although we have a great time in this business and we have a lot of fun, when you're sitting down with someone and a consumer, or in our case, our broker partners and our investors, we really have to look at it on a different level.
Yeah,
Awesome.
That makes sense.
Yeah.
All right, bonus question time, Reaza.
Bonus question, yeah.
Are you a Toronto sports fan?
Yeah, I came to this country when I was 4 years old, and we've lived in the GTA most of my life.
Amazing.
Toronto the Blue Jays.
Jays or Leafs? Would you say?
Oh no, I'm Jays all the way.
You're a Jays
I
guy.
grew
Okay,
up
so
and
perfect.
I played hockey and
So
everything.
Neal and I were watching the Jays game last night. They won again. It was pretty
watching.
close.
Yeah.
But it looks like they're going to clinch the AL East pretty soon here.
I think the number's down to 5. I believe.
I think it's down to 5.
Yeah.
And pretty unexpected season this year. I know I had no expectation for the team. I was
had
pretty frustrated
zero
going into
expectation.
the season, but they've kind of proven everybody wrong. So are you feeling, maybe two-parter here, how are you feeling about them going to the playoffs? Do you like their odds? And then what about forward looking into next year with the group they have?
With the Blue Jays? Okay. So I don't think I watched the game last year.
Fair enough. I think a lot of us were on the sidelines.
I was on the sidelines, but I'm back on. I've been I am a lifelong Blue Jays fan, for sure. I grew up playing the game. This year caught me off guard. So going into the playoffs, I actually believe they've proven that they can sustain this.
Yeah.
So I'm feeling pretty good about the playoffs. If they can get the bye and get everyone rested, I think that'll make a huge difference for them. And if you think about the last couple of years, they kind of got burned on the wild card games, so they just could not sustain. Going into next year, they've got a few question marks on the pitching side for sure. I hope they can retain some of the starting pitching.
Yeah.
That would make me a little bit more excited about next year.
Yeah.
But I did like the team going into this year, like a young team. They did not have a great start.
Yeah.
And if you're going to ask me about Vladdy, I don't think we should have given him the $500 million.
Really? He's been pretty good this year, man. So, but it's a long contract.
I've made some comments online about his padded
Got
stats.
It. Got it.
I don't think he's
a
clutch. I hope he proves me wrong.
Sure.
I want him to be the clutch guy when it counts. I haven't seen it yet.
I think that's well said. I'm looking forward to the vibes in the city, although probably won't be here for it. But I was telling Neal last night, I lived in Toronto in 2015 and 16, and it was just insane atmosphere in the city those years.
I went to a few of those games.
I was there too, and it was just like nothing else.
It's a different feel.
It is.
Right?
It is. And I hope for the exact same for this fall for the postseason run.
I'm excited. I've got a few more games lined up. Before the playoffs start, and I'm hoping to get to some playoff games. So
Love it.
We'll see.
Well, Reaza, thank you so much. Anything else you wanted to add before we wrap here? Or?
Listen, I really do appreciate you guys doing this. I think it's a great educational piece, and I hope people take something out of it. And I wish you well on the lending side as well. So
thanks, man. I appreciate that.
Yeah, we all work well together, and we try to anyways. So I think
100%.
that's a key piece to this business.
Yeah. Really appreciate your time and insight, man, and enjoy the rest of the time.
Awesome, man. Thanks,
for
guys.
sitting with us.
Yeah, I appreciate it.
Thanks for listening, guys. It's Neal, your co-host and co-founder at Keystone Mortgage Investment Corp. and Director of Investor Relations. I'm also a real estate agent, real estate investor, and business owner.
And your co-host and co-founder of Keystone Mortgage Investment Corporation, Ryan MacNeil. Keystone MIC is licensed under the Mortgage Regulations Act of Nova Scotia, license number 3000844, and through FCMB, license 89280. Keep in mind, the views of this podcast are for informational purposes only and are not financial advice.